What is going on, traders? Welcome back to the Traveling Trader. Today I wanted to discuss my top 6 tips for making money in a bear market. Now, this video is obviously appropriate for the current time, being that we are in the 2020 bear market, but these strategies and these tips really apply to the market year round. Now, if you've been following the trading group on the Discord, you'll definitely notice that we have not been passive during this bear market, right? We're not just distant observers. We're taking a proactive approach. We started buying blue chip stocks like Microsoft, Amazon, Nike, etc. This was on March 23rd. That was the same week that the Congress was looking to pass the stimulus bill. So let us get right into it. Tip number 1, stop following the herd. What you want to be doing is fading the market. Now, this sounds great on paper, but is very hard to put into practice, right? Essentially, you want to be selling into rallies and buying the dips. But trust me, from personal experience, when I started trading, as well as my observation of others that have just started trading, this is so much easier said than done because it goes against human nature. It's very hard to buy something that visually you see is losing value. And it's very easy to want to jump on board to something that has already gained a lot of value. And that is the reason that stock prices drop, right? It's due to panic selling. Traders are willing to offload their stocks at a loss or for cheaper prices in order to exit the market, right? But here's a question. We're taking a look at Home Depot here. This is one of the stocks that we bought. We're up 34% now on Home Depot. And if you want access to the trade alerts, link is in the description. However, look at a chart like Home Depot and you can really pull up, most charts look like this. You see the price tanking, right? A lot of people don't understand, they don't even have a rudimentary understanding that there are buyers and sellers in the market. And when you're selling or buying, you're not doing that with, to and from the exchange. There's a person or an institution on the other side that's willing to buy or sell at the other end of that transaction, right? So when you're buying a stock, somebody's selling it to you. When you're selling a stock, somebody's buying it from you. You're not buying and selling to the exchange. So in essence, you want to be thinking to yourself, who is willing, if I'm a holder of Home Depot's now crashed 30-40%, who's willing to buy what I'm selling here, right? There's somebody on the other end that's saying, oh yeah, this looks like a great price. That's the person that you want to be. That's fading the market, right? You're essentially buying when it's dipping and selling when it's rallying. Now, if you're a long-term investor versus a swing trader / day trader, you obviously want to tune this a little bit. So for instance, my initial motivation with buying Home Depot at that price level, Nike at that price level, Amazon, my intention was to buy these stocks for the long term because I did not know that nobody can judge momentum. Nobody can tell you, what momentum is going to do. I initially bought these because they were blue chip companies that were now at a major discount. And whether the market rallied in a week or whether it rallied in 6 months wasn't really a concern for me. A swing trader might be looking to take profits here or at least set a trailing stop and then maybe re-enter if the market starts dipping again. But that's neither here nor there. This takes me to tip number 2, blue chips for the win. Now, a blue chip stock, that's an informal term. It really just means a reliable company or a reliable investment. So in investment terms, you're looking for proven companies that have, decades of a proven track record, that have great balance sheets, great cash allocation, are consistently beating earnings or meeting earnings. They might be paying a consistent and high dividend. So when you start thinking of these companies like McDonald's, Nike, Google, Microsoft, Amazon, Home Depot, Visa, these are really household names. Now, fun fact, the first time that I made life-changing money was in the 2008 financial crisis. At that time, I had no responsibilities. I was living cheaply, and I had a good amount of savings from working in the tech industry for so long. And essentially, I just bought all the blue chip stocks that I could afford at the time when the market crashed. And because it's money that I really didn't need for liquidity, right? I didn't need it to pay bills or groceries or whatever. I really didn't care if the market recovered in a month or in a year. I just knew that I was getting value for my money. All right, tip number 3, you will not find the bottom. Everybody is so concerned with finding the exact bottom. If you take a look at the 2008 financial crisis, let's take a look at the Dow Jones, for example. You'll see that initially we lost 40%, right, before the market flirted with a recovery. then dropped down to 46%, almost 47%. And the market again was flirting with a recovery. And then by the time the bloodbath was over, we lost almost 60% of value from the recent high. All that is to say, you will not find the market bottom. It's an exercise in futility. You could get lucky, once or twice, but you will not find the bottom, and therefore you should not be concerned with finding the bottom. And what I tend to do is not go all in one price point. If you take a look at my portfolio, which I share with the group in the Discord, you'll see that I'm still sitting in quite a bit of cash, because if the market starts tanking further, right, we made a low at around March 23rd. That was the Monday of the week that they announced a stimulus bill. But if we go lower, I'll want to get a better average price on my blue chip holdings. All right, number 4, trust market history. If you take a look at the stock market charts, the long-term stock market charts, this is the Dow Jones, going all the way back to 1914. It's essentially one long trend line, right? We obviously have a hiccup here. This was right after the Great Depression, but eventually we recovered. Now, this is just natural in a capitalistic society, right? As the number of people start to grow, as the GDP increases, as the number of companies that are available on the market increase steadily year after year, as the number of innovations tend to increase, all that has a compounding effect on the total market itself. So trust market history, look at long-term charts when you're doing your analysis, and it'll give you a much broader and clearer perspective, and it will help contextualize these crashes that you see here. This right here was the crash in 2008, right? You also have the dot-com crash from the early 2000s, 2001, 2002. Here's the 1987 crash that you see here, right? And once you start putting into perspective over the long term, you see that these really just appear as blips on the radar. All right, let us go into tip number 5. Stop confusing strategies. I see this a lot in our trading community where, for instance, someone will enter a trade for the long term, then they'll get enamored by the short-term profits and essentially miss the forest for the trees. Here's a visual example of what I'm talking about. Let's look at Nike's chart, for instance, right? So when we bought Nike on the dip, again, this was during the week that they were about to announce a stimulus package. I felt like it was the first solid starting point to start dollar cost averaging into stocks. Not only that, taking a look at technicals as well, yada, yada, we don't need to get into that. But imagine that you bought Nike for the long term, and then Nike gets to on March 24th, Nike's now up 15%. So you end up selling. You're like, hell yeah, I'm up 15%. I'm going to take it. I'm going to end up selling, right? You end up selling, and then within a couple of days, Nike jumps up and it's now up 38%. I see this so much, right? Where folks trick themselves into thinking they're long-term holders. They sell when they're up in profit. The stock moves on without them, and then they lament the gains that they could have made. Now, I'm not saying you can't change your strategy mid-range. I've done that before many times. But 1, you have to live with those results, right? And 2, know what you're doing. Know that you're consciously changing your strategy from a long-term hold to a swing trading or day trading strategy. Make sure it's not an impulsive move just based on the shiny profits that you see in front of you. If something about the long-term setup or the fundamentals completely change to where you now want to book profits because you're avoiding some sort of long-term risk, fine. But if you bought in for the long term and you see, a few percentage points in profit, and that's enough to get you out of the trade, then you have to live with those results. So don't confuse strategies. Don't trick yourself into thinking you're a long-term holder when you're not. All right, point number 6, continued education. And this is especially true if you want to move away from just being a long-term investor or a Warren Buffett type of investor, right? Where you're trying to find value for the long term. If you want to get into some of these swing trading or day trading endeavors, right, you'll want to educate yourself. You want to educate yourself in technical analysis, right? You'll want to know how to read whether something is extended. Looking here at the SPY, for instance, this is the ETF that tracks the S&P 500. I could see that there's weakening volume on this price increase, and that there is a resistance level here at around, what is this, around 288. 288 or so. This allows me to make short-term moves. Also, educating yourself about news cycles and fundamentals. Like, how did I know when I sent out that alert on the Discord on the 23rd that I'm buying all of these stocks: Microsoft, Amazon, Nike, Visa, Nvidia, McDonald's, Home Depot, Google, Apple? Like, how did I know that, you know, that was the time to buy? Well, like I said, it's not like I was trying to time the bottom. I'm not a fortune teller, but I identified it as a potentially optimal first entry on this market crash, because that was the week that the stimulus was looking to be approved. Now, there was still some uncertainty about the stimulus. Would it be approved that week or the next week or the following week? But if you followed the news cycle closely, you knew that both the Democrats and Republicans were not willing to let another week go by before the stimulus bill was passed. So the news wasn't entirely priced in, and the market had a chance to react to it because it wasn't entirely priced in. However, like I said initially, you can't predict momentum. So no, I didn't think that I would make 30 or 40% within a couple of weeks on stocks during this bear market. So do your research, learn how to read charts, how to read patterns, how to set up your indicators, how to follow news cycles. And it doesn't mean that you should be tracking every single industry, from pharmaceuticals to technology to oil to commodity to other commodities. You obviously can't trade everything at one time. So just pick a few industries or companies to track and go from there. Maybe do your research at night when you get off work and try to set up your trades for the pre-market. But in my view, as a trader, continuing to educate yourself is paramount, and there's no substitute for it. That also allows me to speculate on derivatives such as ETFs, leverage ETFs, inverse ETFs, options, etc. You would not be able to do that without learning the technicals. Now, obviously you don't have to do that, but you would not be able to do that without learning the technicals, learning how to read charts, support and resistance levels, etc. Anyway, that is it for this video. I would appreciate if you leave it a thumbs up if you got anything out of this video. Leave a comment section below. Let me know if there's something you agree with, disagree with. Let me know if you have a question. How are you preparing for the bear market? What stocks are you buying? Sign up if you want access to the trade alerts. If you need help with technical analysis, would like to learn how to trade options, or would like one-on-one time with me, we do that over video conference. That same link is also in the description. I can only take a handful of people every month. Spots do fill up fast, so sign up if you want, or hit me up if you want more information about it on the Discord below. Subscribe to the channel if you haven't already. Hit that notification bell. Please stay safe out there. Peace.